NSE 20 is now below 4,000. These were figures we'd seen at the start of the year. Good banking figures encouraged us that we were going to breach and come above the resistance level of 4,000, but it doesn't seem to be holding up.
Good afternoon, Lerato. Yes, the figures that we saw towards the end of the first quarter, unfortunately, really have not spruced up the market far enough to be way above the 4,000 mark. So we are back below the 4,000 mark. But today we saw some interest return on the market in terms of Uchumi supermarkets, in terms of Kenyan Kobil, and also for Safaricom. So unfortunately, those were not enough to spur up the stock market.
Talk to us about the currency, please, Kimathi. Today it's looking a lot better in the region of 88 shillings 35 cents. Some pessimists were saying this very week, we could see it hit 90 shillings to the dollar. What's going on the currency front?
Yes, the pessimism is really out there. Some are saying 90, and others are putting it actually as high as 100 over some time. But what really is happening is that after the budget readout last week, now we have really gotten to get more attention in the detail. And one of the concerns we had last week of the maize importers immediately rushing out of the Kenya shilling to import some maize, we've seen that having to be pushed forward at least for a month due to some technicalities. So we're seeing the shilling firm up at least for the next day or two.
All right, the shilling firming up, what impact has that had on the secondary markets, particularly government securities? Because as we head to the end of the government fiscal year, they're really hoping to consolidate a lot of their debt and raise in excess of 100 billion Kenyan shillings.
The government really has for a long time been one of the big sellers of the shilling. So a fortnight or so ago, we saw that in terms of euros. Now it's really the dollar concern again. So the government debt issue really continues to be an issue of concern as the year end approaches in the next fortnight or so.
Going back to the equities market, Kimathi, Uchumi, you mentioned them, they seem to be doing well. Now, given the history of this company, the fact that they relisted about a fortnight ago, that many people were very skeptical about the soundness of their balance sheet, what's bringing investors into the stock?
What really has brought back the investors is that the retail market has not really rushed to pull out of it. So the concerns that were there initially, have been eased, and it being the only retail outlet listed, we see quite some positive aspect to it in terms of exposure to the retail segment. So Uchumi is really looking rather bullish, though today it eased up slightly a few cents, about 50 cents or so. So Uchumi is really a counter to look out for.
You mentioned Safaricom, and we do know that they went into a tower management deal earlier this week. Just in terms of their strategy for dealing with competition, I don't want to quite use the word survival, but what's Safaricom at play?
At play at Safaricom, actually from last week when we saw some executive decision being made by the head of state in terms of the end transfer fee not coming down any lower. We've seen that really eagering very well for Safaricom, and with that we've seen quite some interest come back onto the counter at 3 shillings and 90 cents or so. Before that, it was really not looking eagering too well for Safaricom. So with them now, with that executive order not to bring down the rates further, it really eagers well for Safaricom in that they are able to at least retain their customer base. Remember, with reports that came out earlier last month, we saw that in the first quarter, Safaricom really was the net loser. They lost about 6% of the market share. So Safaricom really boasted by the news of the end user transfer charge.
What's happening with the financial institutions? We're seeing activity, particularly on the blue chip banks like KCB and Equity. KCB gaining, Equity losing a bit of ground. But in the last week, it's really been the insurers that the investors have been particularly interested in. Why is that?
Well, the beauty about the insurers and the other investment management firms listed is that they are really providing exposure in terms of the assets exposure. So if we look at, for example, the two insurance companies listed, we are seeing that we have a lot of exposure throughout the region, and in assets not only that are financial, but others in as far afield as power projects and that kind of a thing. And that's the kind of exposure that investors are really looking out for, away from the pure banking sector, where in Kenya now we are really having a lot of concerns with the high interest rates. So we expect quite some markdown in terms of the assets held for trading. So the Q2 results may be issues of concern for the trading securities.
And a final question to you. The interesting phenomenon, the market is down. That should make some assets cheap, but it doesn't seem to be the case. When you look at the PEs, for instance, of some of the big banks, it's still very expensive stock. So for anybody coming into this market, how do they navigate the terrain? Which sectors should they be going into?
I think one of the biggest things to look into is the exposure aspect of the various counters in terms of geographic spread. I'm very big on the geographic spread because you have to keep in mind that next few months or so we'll begin going into an election period. So the exposure into the rest of the continent is really a big thing for me, and I think that's what investors should really look out for in terms of getting back onto the Nairobi Stock Exchange.